What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So, as we have seen over the past couple of weeks, the credit / the collateral crisis has been heating up. There's a lot of indicators of this, and we're going to go over some of the new developments in this video and how I believe that this could potentially lead to the next large market crash, correction, or whatever you want to call it. Now, when we talk about a market correction or a market crash coming in the near future, a lot of people get very worried about those types of statements because a lot of us have a lot of money invested into AMC. Now, a lot of people have been thinking, if the market crashes, well, AMC would probably sell off with it. That is not the case, and we're going to go over exact evidence as to why that is not the case in two possible scenarios that could potentially play out. So we have a lot of indicators to go over in this video that basically show us that every single piece of economic evidence and indicators are pointing towards a delevering period and the market having a significant sell-off. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out in getting this information out to as many people who want to learn. It really helps out with the YouTube algorithm. So if you guys could hit that like button, I would be greatly appreciative. So when we're looking at the chart of AMC, at the current time that I'm recording, we are still down about 5.2%. We saw a significant sell-off of AMC earlier this morning, and that was kind of interesting to see because we did see Black Widow break the pandemic box office record. We saw the UFC event being shown in AMC. We don't have necessarily the numbers for that event yet, but from anecdotal data, I've talked to a lot of people, the AMCs around their location that was offering this fight, they were all basically sold out. So we are seeing a little bit of a bounce. We have been here before. So again, my strategy is just to buy and hold and wait for this all to play out. But again, none of this is financial advice. These videos are for educational purposes only. Now, when we come over to Ortex, we can see that at the current time that I'm recording, let's just refresh this real quick to make sure we have the most accurate and up-to-date data. We can see that the short interest is actually down slightly today, and the current short interest is about 18.71%. Again, Ortex is not reporting the full market picture, and this doesn't account for naked shorting. So when we go and talk about this whole market crash situation and why people are so nervous about it and kind of dispelling those fears, we have to talk about something called beta. So when we come over to NASDAQ, this is essentially what beta is. Beta, the measure of an asset's risk in relation to the market, for example, the S&P 500, or to an alternative benchmark or factors. Roughly speaking, a security with a beta of 1.5, positive 1.5, will move on average 1.5 times the market return. So if the beta is positive, that is a positive correlation between where the market goes and where a given security will end up going. Now, you might be thinking to yourself, what exactly is AMC's beta? Now, we don't have exact numbers, but we do have three different sources that do give us an idea of what AMC's beta could potentially be. So we have this one right here. AMC's beta, this is from about 2 weeks ago, is negative 3.2. When we come over here, this is taken directly from a Bloomberg terminal, and the raw beta, negative 17, the adjusted beta, negative 11. And then on TradingView over here, we can see that the 52-week low and high, and then the 1 year beta is negative 5.26. So when we come back over to NASDAQ, this is an inverse relationship to the market. Now, in order to calculate beta, it has to do with covariances and variances of stock movement. It revolves around the capital asset pricing model, the CAPM model. But basically what you need to know is that there's an inverse relationship between the price movements and returns of the overall market and AMC returns. Now, that doesn't even account for the possibility that we are going to see these forced liquidations and shorts eventually start to cover, which could push the price of AMC even higher. Now, when we talk about this credit and collateral crisis starting to heat up, there's a lot of indicators that are basically telling us that it is entirely possible that we see a move to the downside in the broader market. So one of the things that I have brought up many times on this channel is the margin debt in the United States at the current time. We are currently sitting at almost $900 billion in margin debt, and just to give you a comparison, the margin debt back right before the global financial crisis was just over $500 billion. Now, the Fed has also come out and said that hedge fund leverage levels are well above their historical averages. So we know that a lot of these funds are wildly over leveraged, not only on their short positions in AMC, but in their long positions as well. That is why I believe that if we see any sharp volatile move to the downside in the broad market, we are going to see more of these margin calls, more of these forced liquidations, and that could lead to shorts ending up covering their positions on AMC. Now, in addition to this, we also have the reverse repo market basically consolidating at this $700, $800 billion range. We have talked about this a lot, and I'm going to keep talking about it on this channel because this is incredibly important in understanding how our banking system essentially works and where it's at the current time. So what's happening in these reverse repo transactions is that the banks are supplying the Fed with cash and the Fed is supplying the banks with treasuries. What this signifies is that there's too much cash floating around in the market, and the banks need a place to park that cash in these overnight operations in order to maintain and stay within these regulatory standards. Now, when we look at what Wells Fargo has recently done, it told its customers it is shuttering all personal lines of credit. The important thing to note here, the personal lines of credit isn't necessarily as important as the portfolio lines of credit. So in a portfolio line of credit situation, we are seeing these loans go out that are backed by the value of a portfolio. So it's entirely possible that Wells Fargo is thinking that these loans at the current time are way too risky for where they think the market is headed. The second thing that you have to keep in mind is that the fact that they're going to be basically recalling all of these loans in September, they're taking all of that cash back. But we already know that at the current time, the banks have too much cash. So there's a very interesting dynamic flowing around here. And something to really keep a lookout for is that if other banks start to shutter these portfolio lines of credit, and if they start pulling back on business lines of credit, because if you pull back on business lines of credit, a lot of these different companies are no longer going to be able to do these projects, and they're basically going to be stuck, and that is going to signify an economic slowdown in growth, and we could actually go towards the other direction. We are also seeing that in the 10-year Treasury yield. We are seeing a trend of the 10-year Treasury to the downside. When the 10-year Treasury starts to turn down, it signifies that money is flowing from equities or other investments into a safer investment such as a bond. So when we see these sharp declines in the 10-year Treasury, it basically signifies fear in the market. So we've been seeing this basically since March. We've seen basically a peak in the 10-year Treasury, and we've been on a downtrend ever since. This could tell us that we are at the end of the economic growth and recovery that we saw from the pandemic, and we could be heading into a down market. But again, as we showed before with the beta of AMC, that is not really going to affect us, and it actually could benefit us. Now, in addition to this, we are also seeing Credit Suisse get into even more trouble. As we can see here, Floriana Scarlato, who took the compliance job at Swiss Universal Bank on March 1st, as the chief compliance officer, is leaving to pursue opportunities elsewhere. So she came on March 1st and is now leaving. That is not a very long time to be staying at this giant bank. But we can see that Credit Suisse was hit by a corporate spying scandal, followed by the wind down of $10 billion funds linked to now collapsed supply chain finance firm Greensill, and billions in losses stemming from lending to family office Archegos that imploded. So it is obvious that Credit Suisse is participating in a lot of these nefarious activities in our financial markets. But Credit Suisse, it really looks like they were the only ones as of lately that have really been caught for all of these manipulative and basically illegal tactics and actions that they have been participating in. But it is also possible that this individual was brought in, Floriana Floriana Scarlato to actually help out with these compliance concerns that Credit Suisse had. And the fact that she was not able to help, she could have been removed from her position, but it is also entirely possible that she just saw all of the terrible things that were going on at this big bank and decided to leave. So what this basically gives us is a snapshot, a little bit of insight into exactly what is going on at these big banks. If we see more compliance officers start to leave at different banks, or we are also seeing individuals at Citadel actually start to leave, this could signify that people are really getting wind of what is going on, are understanding what is coming in the near future, and are positioning themselves accordingly. So that is going to conclude this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. Again, it costs you nothing to do it, but it really helps us out in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.